Hello everyone, George DeSantis here with the look of the market for the week ending February 26th, 2021. And before we go further, we need to bring up this disclaimer and ask you to take a look, make sure you understand I'm not attempting to give any particular person investment advice since I'm not a licensed professional investment advisor, and you should seek that elsewhere if you need to. Um, these are YouTube videos that anyone can look at and make of it what they will. Well, for those of you who are new, I basically take a look at the general market using the S&P 500 as an example. And let's take a look at that. Let's do that now. This is a weekly chart of the S&P 500. And what we see here is that this 4 exponential moving average is above the 9 exponential moving average, and that's above the 30 weighted moving average. And so insofar as these moving averages go, on the weekly chart, we have an uptrend still. We also have the parabolic with the parameters that I use, these here, below the most recent bar, that would be last week's bar, and that indicates that we are still in an uptrend here. Um, we are a bit away from now from the 2 standard deviation Bollinger Band. So we're pretty much in that area where we might see a rally from here. If we go down to the ADX indicator, the average directional index, you'll see that the histogram is still trending up. It's still in an uptrend. And the DI plus is still above DI minus. So that's indicating an uptrend. I know that the daily chart will look a lot different, but this is what the weekly shows. Please excuse my voice. I have a little raspy voice today. When we look at MACD histogram, this one, the 1226.9, we see that divergence of MACD from price. And we've been seeing this now for months, for quite a few months, since back in September. This is what may be playing out here this time, and we can see this in a more pronounced manner on the daily chart. We don't have a sell signal on the daily chart from this MACD 1939.9. Let me pause and get some water. Now I just switched the charts to show you a weekly chart that I learned from Jake Bernstein. He plots this 10-week moving average of the highs, the green line, 8-week moving average of the lows. We call this distance between these two lines moving average channel. What I learned from Jake is that you have a buy signal here when you have a trigger, you have a setup here, and the trigger is this bar falling in between the channel. More ideally when it touches this red line. Okay, so you had a buy signal here, you had a buy signal here, you had a buy signal here, and one again here. And the question now is, do we have a buy signal here on the weekly chart? Maybe, maybe not. That's a good way to hedge. We don't have a sell signal because to get a sell signal, we need 2 bars, 2 complete bars below the moving average of the lows. And we need this accumulation distribution line to fall below the moving average, the 57-week moving average. So insofar as Jake Bernstein's chart is concerned, we still. Now we turn to the daily chart. Jake's daily chart. Same 10-week moving average of the high, 8-week moving average of the lows. And you can see the channel here. And there are two sort of buy signals that he uses. One is when you have 2 complete bars above the 10-week moving average of the high, and you also have the accumulation distribution line above the average. So you have a setup and a trigger, or it could be the reverse. In any case, you could see what happened here. We fall to to this 10-week moving average of the low, and we get a little bit of a rally. We come back in here, get another rally. We come back. We don't have two complete bars, and we rally from there. We had this bullish Harami, where this bar is, the body of this bar is completely engulfed by this body here, the body of this bar, and we rallied all the way up. Now we started to pull back, and where we are now is that we don't have two complete bars below the moving average of the lows. So there is no setup or trigger here, and likewise here. So we still don't have anything on the daily chart that would indicate to us that we ought to run like hell out of this market. Of course, I have some sell rules that I follow, and those of you who are familiar with what I do know that I use some other sell rules. But we don't have a sell signal here according to Jake Bernstein's daily chart. So now we turn to the daily chart on TC2000, where I use my own charting parameters, my own indicators, not what Jake uses, but I have different moving averages, etc. So here on the daily chart, we have mixed signals, of course. We have the parabolic is above the most recent bar. That indicates a downtrend. We have the 4 EMA cross below the 9 EMA right back here. This was on February 22nd. So we had a 4 crossing below the 9 EMA right here. I circle that bar. It rallied a little, but then continued down. So insofar as moving averages go on a daily chart, we have a downtrend. Friday's bar, the close of Friday's bar, because it opened here, close here. We close right at that 50-day volume weighted moving average. Okay, this is what the magenta line is. The magenta line. Let me get some water. Hold on. So there's a few indicators here of indicating a downtrend. It's 4 cross below the 9, parabolic above the most recent bar. And in fact, the 9 looks like it's crossing below the 30 right here. We need confirmation of that. It's not quite clear yet. We do have the DMI plus above the DMI minus now, with the ADX trending up. So the ADX saying there is a trend, and the trend is down, based on the relationship between this DI minus and DI plus. MACD histogram is showing us that decline. We're getting histograms that are getting longer and longer below the zero line. And also on the 1939.9 MACD, we got our sell signal here on the daily chart. That's exactly when the 4 crossed below the 9. It coincides very nicely with the MACD histogram 1939.9 dropping below the zero line. So there's where we stand on this. But I want to plot now the Fibonacci retracement levels. If I plot it from this level to this level here, okay, from this low to this high, we sit right now at the 618 Fibonacci retracement. The golden rule, 61.8%. So we retrace from this high 61% of the move from here to here. So we're sitting there, and this is where we made this low. Now it's likely that we could see support here, because that's a very common retracement or correction, 618 back to the 618 level. And that's if we trace the retracement from this low to this high. Of course, if we go back further in time, if we go back all the way here, we get different numbers, you know. But let's leave it that way for now. That's what I wanted to show you. Now, let's close here for a minute. Notice too that this bar seems to have closed right at the 50-day volume weighted moving average. Okay, this magenta line here. So there's a possibility, there's no certainty in all of this, but there's a possibility we could find support again as we did here. We could find support again at the 50-day volume weighted moving average. I want to show you the chart of SPY, the ETF of the SPX. And let me pause this a minute. So here we have the SPX, or the SPY rather, ETF of the SPX, and you can see that it's very oversold here now. And in terms of these lines, these three yellow lines we call extreme lines. This is 90%, this is 10%, and this is 50%. It's really a regression channel. Right now we're at the bottom of the channel as we were here and as we were over here in these areas here. And when we get to these levels, we're very oversold. Now it's at the extreme of 9.9, or just right that smack on that 10, okay, on the 10 level. Let's look at the seasonal charts. On the seasonal chart, if I change this to a 56 period, so we can get a little longer look, not just 14 days. If I go to July, for the first half of the year, you can see that we have a trend, we have a trade between March 7, which would be right here, where you see that cross here, March 7 to May 10. It's a 93.75% win percentage, because 15 hours out of 16 years, the market has been up during that time. You could actually see the numbers here. You could actually see the numbers. The only year that was negative was 2005. That's in 16 years. So a good trade, statistically wise, between March 7 and May 10. If you trade options, you might want to go out to a March or an option, March or May option. Okay, so that's the seasonal there. And if you're curious about the Qs, the Nasdaq, same thing. Same thing. Okay, I'll show you. 56 days. I like to see a longer period, not just 14 days. And you can see March 8th to May 3rd. So same time period. And you could see the line, you could see the uptrend. Okay, you can see the pullback in February. We saw that seasonal pullback recently. So that's what we got for the seasonals on the thing. So I'm expecting a rally from about in about another week, or even this coming week here. We could start seeing a rally from here. Okay, according to the seasonals. Let's turn to Shaken Analytics software. And what I've done here, as I often do, is take my main watch list, this one, and because I have a lot of stocks here, about 100 of them, 32, 54, 80, yeah, about 100, almost 100. And what I do is I go through especially the bullish and very bullish stocks, and I look for those that are oversold, and I made a list of those that are in that general area of being oversold on the oversold indicator. And so I made a list of those, and you can take your camera and take a list and take a picture. It is a list of bullish and very bullish stocks, and at the bottom I have some neutral as well, some stocks that are rated neutral. So you could see that when you have a green percent here, green percentage indicator here, that is what happened on Friday. These stocks were up X number of percentage points, okay? So ADS at the very top of the list, the Alliance Data Systems. If we look at the checklist, you can see it's very bullish, and it was oversold and it's pulling back a little bit, but all the other indicators are very bullish. You can see it here. AOSL, that's Alpha Omega Semiconductors, pull back to the 21-day average and oversold. It's one that I put on a short list to buy. The ARCs have pulled back, and so whereas they were oversold last week, they are now, the ARC ETFs are now, they were overbought, I should say, a week ago. Now they're oversold. So we're looking to buy them off of this in area here, off the 200-day or the 21-day, okay, moving average. This is Citigroup, but it's overbought. This is Dell. Dell is becoming oversold, and it's in this area right at the 21-day average. GM is getting a lot of attention. Recently, though, it was overbought, and now it's becoming oversold. It is oversold. So, and it's right at the 21-day average. So that's one I put on my short list. Google is oversold now, and it's right at the 21-day average. I'm going to run through these, but you could always replay the video. IWM is the Russell 2000. And one thing we're noticing this weekend is that as opposed to last weekend, I didn't do a video then, but as opposed to last weekend, sorry about a phone call, the interruption. I was beginning to say that as opposed to last weekend, this weekend we are seeing many more stocks that are indicating that they're oversold in this region here, below that 30% line. Last weekend we were hard pressed to find stocks that were oversold. So I think that is a good sign for the market, indicating that the market might and could possibly find somewhat of a bottom here and start rallying from here. So let's continue. This stock here, this MJ, it's one of these stocks, ETFs, I think it is. Yeah, it is an ETF of marijuana stocks. Had a very big run up here, and now it's pulled back to the 21-day average. RBBN, that also had a nice run up and pulled back, and now it's oversold. So you're getting opportunities to buy these stocks now. Ally Financial, the financials are doing well, starting to do well. It's beginning to become oversold. Now, again, when we look at the ARKs, the ARK ETFs, you'll see that most of them are in this area. They're oversold, but all the other indicators look damn good on their ETFs. See, for example, ARKW, same thing. This is Broadcom. Broadcom is oversold, okay, and sitting at a 21-day average. So this is a good time to take a look at Broadcom. All green on the screen. CDNS, Cadence Design, oversold region, bumping off the 200-day and the 21-day. Okay, for finding some really good opportunities here this week. Here's Deere, the tractor company. It's been trending up. It's not oversold, but it looks like if it wants to go higher. DQ, it's an energy stock, semiconductors in the energy business, and you could see that it had a nice run up, came back to the 200-day, to the 21-day, and now it looks as though it wants to go higher, and it was oversold. I have to thank Christopher for bringing it to our attention. You can see that the relative strength is pretty strong. I'll go through a few more of these, but then I'll let you take pictures of it if you want. You know, I leave these here. You could take your camera and take a picture or take notes, you know. But I like this Generac, okay? Generac is a generator which I'm going to buy one and install it in the house because of these damn interruptions of power that I get here. But you see it pulled back to 21-day and now it's rallying again. It was up like 4% on Friday. It's a $329 stock, but it looks damn good. It's not quite oversold, but I like the company, the story, everything. Intuit, it has a long sort of a trading range here, but it's becoming oversold. iPay, the payment systems, Visa, MasterCard, Square, PayPal, all of these are beginning to come to life again. So take a look at them. You see, iPay is almost oversold, and it came back to the 21-day average. LAD is another one. You could see it pull back to the oversold line here. So I like to mostly look at the bullish ones. So I'll just page down here before we end, and you could take a look at the ones that are in addition to the ones that I just described. Now this stock, I used to own this stock a while ago, INMD. It's a healthcare equipment stock, but I won't go into the details now. Keep an eye on it. It's oversold right now, and you can see the money flow started to come in here, and relative strength increased. Um, Etsy was up a lot on Friday. They declared earnings and beat the pants off the earnings. They estimated 67 cents and they came in with 93 cents a share. So take a look at these. We have a longer list this weekend. That's enough for now. We'll try and do this again next weekend. And good luck with your trading.